All righty, folks. Anybody that wants to jump over here and look at doing markups, is my screen coming up?
Yes.
Good. All right. Here's the cues. We're going to talk about marking up a chart, and there's all kinds of things to understand about marking up a chart. Now, we were just talking about trend lines and stuff like that, so I want to point out this is the cues right here. Here's yesterday's action in black. Here's the overnight session in gray, and then today's session. I'm currently on
Marzini, can you start with how did you get your chart to look with that background?
Now, I'm on Thinkorswim. So what I can do here is I can go to the cog, the chart settings, and you can go to the appearance tab. You can set your candles here. And down here, you've got a background button. So if you'll notice that this is the regular trading sessions, however you want to do it. I happen to like black because the candles stand out to me better. Now, there is a way to set the after hours session. Let me see if I can remember how to do that. I believe that's going to be under equity. Is it under equities? Show extended hours. Oh, gosh. Where was that? There's a way to
go to future, Marzetti, and then you click on highlight extended hours trading in the bottom.
Yeah, I was
Here
trying
it
to
is,
change
the
the
second
color.
one.
I was trying to change the color, but let's see. I'm on
You go to
equity.
appearance. You go to appearance, and then here it is. Yes, you're changing the colors. Go to the cursor.
Here.
This one, yes. No, the box which is have the color, the gray. Yeah, that's the one.
Let's see what that does. All right, it gives me a blue cursor. I think the question was, how do I change the after hours color?
Yeah, Marzini, I'm so sorry. I'm actually in Trading View. I don't have it put up yet, so forgive me. Somebody else.
I think it's
Go to the
under
grid, Marzidi. Go to the grid. Yes, here, the grid.
Okay, let's see what that does. No? Or did it? Wait. No, it's not that. I'm not sure. I'll have to get back to you guys on that. We'll figure that out here in a minute or in a little bit. Thank you, everyone, for that. Like I said, we'll come back to it and see. I want to show you, we were just talking in Jeremy's session about a trend line. I'm going to start with a trend line tool. And I'm going to take this high from yesterday, and I'm going to click here. And I'm going to take the after hours high, and I'm going to click here. And so notice that I have highlighted. Let me show you where I did this one. And I did that one. All right. Now let's take a look at what happened. Right here when price came to that trend line, it stalled right on it. Then a doji decision, or spinning top, actually, excuse me. This is a spinning top because it's, and then when it broke the spinning top's high, it moved on. So you can see
the green hammer is indicating it's going bullish after the spinning top.
It does.
Because you had one of those lines.
It does indicate bullish here, and then it hit that trend line, and then You've got the spinning top representing indecision. Push up, push down, fight, fight, fight. Didn't make any progress. Remember, when you see these spinning tops or dojis, this would be very close to a doji. But a spinning top basically is that the body takes up less than a third of the entire candle. So I would not call this a spinning top. This I could call a spinning top or a doji. There's several names for this. Number one, this is a spinning top. Number two, it's an engulfing candle because it took out both the high and the low of the previous candle. Now, a lot of people like to see the body take it out, but either way, what this is actually is a liquidity run. They ran the stops here, they ran the stops there, trying to figure out what they're going to do, chop around, and then they ran liquidity up here. And then
Would that also be a dragonfly or a shooting star?
Okay, good question. So this is closer to a shooting star. You see, now it'd be a perfect shooting star if the close was actually down here at the very bottom of the wick.
Wouldn't that then be a gravestone?
So if it's a visible body, like this is a visible body and not a complete horizontal line, if it's a visible body, it's a shooting star. If it comes down and is a straight line across the bottom, that would be a gravestone doji.
So the one that's intersecting where your cursor was just at, not there, but go over 3 candles to the right.
Here.
Is that a gravestone
doji? That is a gravestone doji right there. However, we wouldn't necessarily call it much of a gravestone doji because there's not much of a wick here. There was really no price action here to start with. So to really call it a gravestone doji, I'd want to see a wick. Doesn't have to be as big as these, but I definitely would want to see it up to like where my cursor is now. I want to see a big push up and a slam back down. That would be more of what I would call a gravestone doji. So no more, and I wouldn't call this a hammer, or I wouldn't call this a hanging man. There's just no body. I mean, there's no wick here. The total range is very small. So, at any rate, coming back to this here, we've got the spinning top, indecision, decision made. All right. Now, here's something interesting I want to show you about these trend lines, though. You see where I marked this line. I'm also going to mark here to here. Now, first of all, notice what I am marking. This was a, here's a high followed by a pullback. Here's a high followed by a pullback, substantial pullback. In fact, notice this low here took out the bottom of these lows here. A little liquidity grab. Now, in other words, I wouldn't mark here to here. I mean, you could. I can see sort of a general trend right through here. I mean, we could kind of say there's a trend through there, certainly. And drawing that, notice we stayed under that trend line the whole time. So you could definitely see there's a trend there as well. Now, I got several trend lines here, but what I want you to see is this. See this trend line I marked over here? These 2 points right here and right here. Follow this line backwards. Bam, bam. Consolidation chop through it. Bam, right there. Do you see the power of a trend line now? That's looking in the past. Now, the thing to understand is the algos see these trend lines and they trade but accordingly to them. Now, actually, this trend line really is wrong. And the reason I say it's wrong, does anybody want to say why this trend line's wrong? It's because it really should be it's obviously much cleaner on the top. We can definitely see it's much cleaner on the top because we got a lot of jaggedy here. So that's really not a good line. So yeah, I guess we can stick with the top line because it ultimately did actually show us right there. The reason I like a bottom trend line, and I'm going to take this point and this point. Maybe that's this one's tougher to call because this was a good pullback here. See, we went up and we pulled back. Then we went sideways. So let's see what happens if I take out this trend line. Go away. Okay. So here you see we went under the trend line. We actually changed sides of the trend line. What does that tell us? Well, that we continued to walk this trend line up, but then we went into consolidation and we started moving away from it. This trend line is really not that valid anymore in the short term. So I'll get rid of it. All right. Let's take a look at this trend line here going back in the past. Right here. See that? That was drawing here to here and looking backwards, and we actually see that zone actually was somehow formed back here.
So if you're marking your trend line for the current period and you go backwards, it validates the trend current.
It does. Absolutely it does. Now, what we have here is two trend lines that we see have been respected. And we say respected. Now, what I want to do roughly now is I'm going to come to the vertex here. And I'm going to eyeball this as best I can, right? Maybe right about there. And I'm going to draw a line in the 50%. We see it walked it right here. It rejected from it here. It was respected, 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 respected. We did break it. We did come back up with a little bit more oomph right here. But again, you can say, again, more validation. Now, if I were to carry these trend lines into the future, now maybe I'll just leave these up. These trend lines seem to have some significance. They're respected. So I may very well just leave these trend lines up for a couple days. There comes a point, obviously, where, well, look at that there, as I'm just going back further and further left. But you're going to come into days where you don't have any trend lines here. They're just, too far out of the spectrum. And the same thing can be said. About
so you're doing this on a lower time frame?
So I'm doing this on a 5 minute to get really precise.
But it's respected on the higher time frame, or
sure,
only on the time frame that you're setting it up on?
So let's go to the 30 minute. What do we see? Well, we see this line here on the 30 minute clearly. These are all 30-minute candles. This line here did a couple days ago. You can see here, see that right there? Spinning top doji, sort of a doji, little reaction. You got to understand that a trend line does not necessarily mean Trend lines are targets. And let me preface this to say that so many people get hung up on targets that they really need to practice entries. I mean, time permitting, we'll talk some more about that. But if you're in a trade, trend lines make great targets. You can see what happened here. It means something will happen there. And so you can see this candle right here definitely tells you an indecision. Do we go up or do we go down? Because what might I expect with this big bar down? Normally, I would look for a halfback. I would look for a halfback. But it got through here. We had that drop base candle. We normally look for a rally halfback, but it didn't happen. It broke to the downside instead. So we know that these trend lines are reaction areas. And you can see this a lot of times if you add the volume bar at the bottom. You can see the second it hits that, or if you're watching the level 2, the DOM, or whatever, you can see that it'll explode when it hits those trend lines. A lot of times the activity will explode there. Because the algos are watching this, and the algos know these trend lines are here. Yeah, go ahead.
So as a daily habit, I start off and I mark out the previous day high and low.
Okay.
And then I do the pre-market high and low. And now the after hours, I guess I need to start looking at that too, which I've been ignoring. Would my next step then be to look at trends?
Always mark a trend intraday. Now, it's always nice when we see these beautiful trend lines behind us. This was just serendipitous. This was just worked out nicely, if you will, that this line actually showed such wonderful action here. But they don't always, obviously, there. But what you can see is when, like right here, when we crossed this trend line, we've stayed above it. And now, granted, so if you're looking for a long here, of course, we did go down, and, we actually have gone sideways, if you want to know the truth of the matter, until we got to here. But
see, I would have seen those two hammers and the switch below the trend line there, but not the big, the Marby, those two.
Two shooting stars.
And I would have probably set up a long and gone up to the top of the top trend line for take profit.
Yes, you certainly could have. Obviously, the two shooting stars give you a bearish signal. You'd be looking for a halfback. Normally, we'd be looking for a halfback here. But as you can see, it turned. The challenge here is that the entry, and let me zoom in, see if I can get this to work. The challenge here is that the entry technically would be the break of this candle right here. Or in this case here, if you're looking for if you're taking it here, if you're saying this is a rally base rally, you would actually have gotten in right here at the break of that candle. You'd still be in the trade because your stop would be here. And then if your trend line was already drawn, certainly, as you can see, this candle did stall right here and right here. So there's not a lot of profit in this trade right here. So if you, the challenge though to this is that if you'd have gotten in here, your profit target is about the same as your stop loss, and that's okay initially, but the question is, would there have been any money in it? And so we always just kind of have to remember, always make sure there's viable profit in your trade setup, unless you're, doing a scalp or something like that. All right. Any other questions about trend lines? And then we'll start looking at other types of markups. Okay. I'm going to clear this chart here. Now, let's go. This is personal preference. This is not a right or wrong. I like the 15. Now, let's talk about horizontal lines for a minute. We typically want to mark, so the black represents the trading day. I typically want to mark the prior day's high, prior day's low. Notice what happened right here. Zoom in on that. Stuck its toe out, slam. Comes back up, slam. See this nice big rejection candle right here tells us that. Now, what's the significance of this line? Well, the significance of this line, this prior day high, is that people that went short, their stops would be right here, right around this line. And that's exactly what happened right in here. They ran the stops.
How do you convert the prior day high or low and determine where the resistance and support zones would be above or below those lines?
Okay. So there's a couple ways you can do this. One way is to use a Fibonacci tool. Another way, so let's just start with the Fibonacci tool. I'm just going to call out several ways. There's no right or wrong. You have to remember everything works somewhere, somehow. Everything just about works. As far as your stops and things like that, or your trade ideas. You have to always remember you take it in other context. In other words, I would not simply say, oh, we broke prior day's high, go long. Well, you would have been stopped out. Context would tell you liquidity. Wait for it to take it. Let's see if the next candle breaks and runs. And you could have said that this candle ended here, so if we take it, which it did go one or two little points above it, or ticks above it. And you could say I would take a long here with a short back, with a stop here. You could have done that, because that would sort of kind of lead you to a breakout. But again, in context, I also remember this is a liquidity grab. So this is completely normal. This is completely normal. I've got a big fat bar right here. And if I run, well, it's not going to show up very easily, but if I were to run a fib just on the body, you would see, let me get rid of this one for a minute. Come back to that. We marked this candle right here. This would tell me my upside target at, well, I don't have it marked out, do I? Let's open that up some. 0, 23, 50%. This candle hit 50%. It did hit 100%. So this candle ran 100%. And you'll notice that 100% is right about here, right just outside of that higher high. So always keep these bigger standout candles in mind.
Can you mark that from the open and close, not the high and low?
You can do both. I kind of adopted Jeremy's style. He likes doing just the body. But again, totally up to you. Totally up to you how you want to do that. But anytime you see a big bodied candle, always pay attention to what happens following it. Because that
So
tells you,
you're running. I'm sorry, Marzini. So you did the fib on the. Is that called a Marabuzu candle?
I don't know the name of that one necessarily.
Okay. So you ran it on that. Would my next step then, not to leave the fib up, but to draw a box and color it red for the resistance on the 100?
Well,
Or around the range of the high and low?
so remember, I've got two things going on here. Three things. I got three things. Number one, now actually I marked wick to wick. Look where it stopped. 100%, a full measured move. Actually, wick to wick was the correct way. So wick to wick, it moved a full 100%, stopped dead on it. But, so okay, that's nice. Two, we've got this prior day high where I know that there are going to be stops here. And so I'm expecting a possible pullback, which happened, or a reaction anyway. But we did get that pullback. So three things. One, anytime we see a big bar like that, watch, here's a big bar. Let's watch what happens with this one. Remove this. Now let me mark this bar. And I'll go ahead and mark the wick. Where is the 100? Here's the 100. We also talk about the 50, which is right here. Now, I'm not saying necessarily, what I'm stressing here is the significance of a big bar also gives us a range of what will happen if price continues moving. Doesn't necessarily mean a lot of times big bars will also turn around and go right back into the middle for the half back and chop around in there. So I'm not saying that's a trade signal. I'm saying pay attention to big bars as far as telling you where things will go if it keeps moving.
Yeah, I'm trying to understand because I know like the line you have there for the per day high, it's not really a line, it's a zone. And I'm trying to understand.
It kind of is a line. It kind of is a zone. Now, we typically treat prior day high, low, and close as a to the tick, a to the penny number, because we expect to see stops sitting just on the other side of it or just at it, whatever, wherever it may be. Remember, these people went short up here. So as the trade starts to work in their favor, you know, they take profits, they leave some runners, and they set their absolute stop at their entry point, which was that number, that penny. Now, let's talk about, so let me finish horizontal lines. We'll go to zones next. Very good. Horizontal lines. What else is a horizontal line here that we can look at? There are other things that you can do to mark up a chart. Can you mark up the numbers from pre-market? Absolutely. Let's go into this pre-market here. Let's mark the lowest low of the pre-market. I'll change that to gray or something similar. And duplicate. Come here.
Yeah, generally, what I'll do a solid line for the pre-day, and then I'll take the same color and do the pre-market as a dash line.
Okay,
and
that's
then
fine.
Set it right.
Now let's
And
see what
top
happens.
or bottom.
So what is this? What happened with this candle right here? This candle, notice it's just a wick. What did it do? It ran liquidity from everybody that went long down here. These people went long. What? And they set a new pre-market high. But at any rate, the point is they went long. So there are stops sitting right here. Market opens. First thing it does, grab the stops. Grab the stops so it can go the other way. What is this pattern right here? Does anybody recognize this 3-candle pattern?
Reversal.
It's a drop, base, rally. Entry long is the break of the middle candle here, because at the time we don't that's all we see. That's all we see. So you have a drop, you have an indecision candle. That's big. It's a big indecision candle, but we still have an indecision candle. Notice the wick, big wicks on top and bottom, indecision. Where's the go long? The go long is the break of this wick to the north. First take profit is your choice here of either that open or the high. So as we see what happened, it was a complete turnaround. So you could have actually taken either one. And then you say, well, what's my next target after that? Here. What's my next target after that? Here. And then here. Notice I'm just stepstoning back up as we go. Now, what happened when we hit pre-market high? Notice we stalled, right? I mean, the candle closed. It did break it, and it did close. And it made a brief moment to come back below it before it took off. So, nice little significant lines to mark on our chart there.
So would you then look at the where it's at right now for possible break and retest?
So
Setup?
this is a rally base, and right now it's a drop, targeting right down in here. My stop would go up here. Now notice though that it did go down into here and it's pulling back. At this point, I might be looking to cut this trade for a loss. Because they don't obviously always work. It would be nice to see a halfback of this move, but that's only, you got trending days and then you got consolidation days. If this is a trending day, this is just going to keep going north. If it's consolidation day, it's going to do a halfback, which would put us right about here. All right. But, normally by this time here, if I were to go, let's say, down to the 5-minute. Now, let me point out something. Always look for your trades on the higher time frame. Always look for your entries on the lower time frame. Write that down. Write that down. Your trade happens on the higher time frame. Your entry happens on the lower, because you want to get the best price that you can. But you say, well, what exactly constitutes a higher time frame? The 5 and the 15, is that, that's only 3 steps, 5 times 3 is 15. Is that enough? And it can be. It can be. A lot of it also depends on what you like to hold. This is going to be a stop out right here. You can already kind of see it. It pushed. We would have taken our entry wherever, and it went down, and then it wicked. It couldn't get it. This is probably going to be a stop out, because I already know my stop is right here.
So if you're looking at MTS and you do I'm just trying to confirm my thinking. If I start at the day, then I use the 4 hour for the day. If I'm at the 4 hour, I'll look at maybe the 1 hour. The 1 hour, I'll look at the 30 at the 15, the
Right.
15
We're
at the
going to
5.
come to that. Right. We're going to come. That is actually very much next on the. Look at there. This thing may not stop out. We'll come back to it and check it and see. All right. Now, let's go back to drawing out our lines. Do I have any other lines of interest here? We marked out the pre-markets. We marked out the day.
The after hours?
So, if we get more granular, we'll find more on granular, but understand that the more granular we get, the less power they have. For example, let's take this high. We set a little tiny high right here. Let's zoom in on that. We set this tiny little high right here, and we did a pullback. Now, there's two things I want to see here. The first thing is I'm going to mark that. And let's look at what happened. So then the price pulled back, and I'm going to mark that. And we'll make these dash. These are intraday. So notice what happened here. Let's just kind of zoom in on this. Here's my little intraday. So I'm over here somewhere. I look back and I say, okay, that was the high before the sell-off occurred. Came down, then it turned back around. All right, so that was a low before we kind of turned around. Here, stopped dead on it. Indecision candle. Break and continue. You see how these lines make a difference? Now, this intraday line is not going to mean anything necessarily tomorrow. It's an intraday line. Are there any other intraday lines here so far? Right here. Matter of fact, let me just duplicate instead of. Why am I picking that? Because we went up to a certain line and then we started a pullback. And then
It's the high of day.
It's high of day also. Now, how come I'm not marking this one yet? I got to take out this high. But until I take out this high, I don't know that this is the low. Let me repeat that. Until we take out this high, I don't know that this is a low yet. This could continue to consolidate and maybe trend down for a while. So
But the 10-15 candle is your low of day?
For the 1020 candle is my low of day. Why? Well, we've come up here. We had a substantial pullback that took out some lows. We do this here. Then we've come back up and we took out this high. So I had already, anytime I cross one of my marked lines, that gives me a line on the other side. So I marked this because we went below open. Here was our opening candles. For a while, this was low of day. This was high of day. Well, then when this turned and it crossed low of day, down to here, that marked this as the high of day at that moment. Now, this line can actually be thrown away now, but we'll keep it just to see.
So your third candle when the day open would have been the 15-minute high and low. Do
If
you
you're
mark
looking
that
at-
one also?
If you're looking at an orb strategy, now, orb still has to be taken into context. And as you can see here, we did go long on the orb on the opening range breakout from the 15-minute candle. But it was invalidated in the short term by the fact that we came back inside the orb. Technically, the way the orb is supposed to go is you're supposed to go outside of it, inside of it, outside of it. Then you take the long. You're supposed to go outside of the orb, grab liquidity or whatever, which would have been this candle here, wait for it to come back inside, and then one or two candles later, go back outside. Or, I mean, you could still call this if you want. But you would have obviously gotten tore up in this orb breakout here. Ultimately, now if you'd have bought an option and you'd gotten a YOLO to say, let it ride to zero, if I'm wrong, you still might have a chance, depending on how many days of expiration. But orbs got popular because of options. People would put on an option and walk away from it or be willing to take a 50% loss or whatever. The idea of the orb strategy was made popular by options as far as I know. Not to say that it doesn't work here, but had you had taken this breakout, since, we hadn't hit any of our lines yet. When this thing turned around, you could say, well, I'm going to chase it. And you could have said, well, I'm going to put my stop right here. And you'd have made a tiny amount of profit, but not much. But most people still, their stop would have been sitting like right down here because this is a spinning top indecision candle. Well, obviously we'd have gotten stopped out, probably taken the loss. Which this had also been the low of the orb, unless you would have specifically said, excuse me, I'm telling this wrong. This is the top of the orb. You'd have gone long here, but we didn't have this line yet, so you didn't have a target yet, and you'd have gotten stopped out, very possibly. So, like I said, this was made for people that did options, and especially they were doing what we call a YOLO. You only live once, meaning they bought a call for $20, and if it goes to zero, it's just like a scratch off. Don't worry about it. And it probably did go to zero here, but then maybe it recovered, and there's still enough time in the day to actually make some money out of it. That was the idea when the orbs got really popular, was because of options, not because of chart trading. Okay. So this line now is kind of invalidated because we have crossed it. So I can remove this line. We can leave it, but generally speaking, we'll remove that line because it's been crossed. Meaning, now, do I have any lines in here that I should consider? Well, if I cross this line here, then I will put a line here because that was a rejection point while we're seeking the new high of day. Little bit of a spinning top here, but not a rejection, not like this one. Now, what does that mean? Well, that means that the price went up, got pushed back down, and then continued. So what do I do here? I might, from where this candle basically closed here, is where the pushback started to happen. If Thinkorswim will lay this stupid thing to here, to the bottom of this pushback candle, I might mark that as a supply and demand zone. Now, why didn't I mark the entire candle? Well, because the trend continued at the top of this line. This was the pullback, but there was no, so now some people, like, I don't know if Kevin does or not, some people will mark this entire candle. And that's okay. You can do that. I just mark from the close here to where it continued to that clothesline across. That's my style. And then I would color it green as a buy signal. Okay. That's one of the problems about marking up on Thinkorswim. TradingView does much better. To change the gradient of this so I could still see that candle is a lot of steps in Thinkorswim, so it's a pain to do that. Now, at this point, again, I'll tell you there's a box set up here, but this is not a trading video. This is a markup video. What else can we see? Do we see, and notice this, follow the line of my cursor to the left and see what we see right there. We've been here before. All right? We've been here before. Okay. And that was a buy. All right. Now, we can obviously go to higher time frames like hourlies. And in this case here, we might mark some of our bigger outstanding things. What else do I see here? On the hourly, I don't like this on the hourly because it's going to be so big, but I see a fair value gap right there. Okay, there's a markup. We have closed this little gap here. We've closed all these gaps here. What else?
Is that a cup and handle pattern?
You've got a cup. The handle, yeah, you could look at it and call it a cup and handle. This candle is obviously an oddball candle right here, but you're going to see in the after-hour sessions a lot of oddball candles. That's normal. You'll see a lot of people freak out and stand. Now, let me tell you, especially if you're on Thinkorswim, do not get rid of that candle. Because some people will say, correct this bar and remove it. If you remove it, though, some of your studies will break instantly. If you got moving averages and stuff like that, it'll just break them. They won't work right anymore. You got to leave that stupid candle. But again, since this happened since there's no body here and all that kind of stuff, and it was after hours, you can ignore this candle completely, and you could say, kind of looks like a cup. Here's a handle. Here's the break north of it. What would I target? We've already set a target here, high of day. We've got a big fair value gap here. Then what? Well, I've got this high of day candle here. I've got this low of day candle here. I'm looking for significant highs and lows right here. Right here.
Can you explain the significance of the fair value gap and what it means in use for trading?
Sure. A fair value gap means that price moved so rapidly through this zone that other people who wanted to go short at a particular price, let's say there was a guy that wanted to go short right here at 476. But the price moved so fast through that zone that he never got his chance to go short. His order did not get filled. He had a limit order, or she had a limit order sitting right there to go short, but it moved so fast through it. It got pushed through by the institution so fast that his order never got filled. Now, he still may want to go short at 476. So the theory is that when the price gets back up here, that these people, and there are multiple people here that may have wanted to go short, the theory is that they may still want to go short. And so they're willing to go short here. And so the idea is that price comes up into the fair value gap. All these people that wanted to go short get their orders filled, and we roll over and go south. The problem with the fair value gap, a lot of times on the hourly especially, look how big it is. 472 to 478, 473 to 478. That's $5 on the Qs. That's a lot. So you say, well, where would I possibly get into this? The other thing is that fair value gaps, as they get older, people lose interest in that trade. Because you're not interested in a trade from 2 weeks ago, in a possible entry from 2 weeks ago necessarily. So generally speaking, I don't like marking. I'm marking this for illustration, but I only like marking my fair value gaps on a 15-minute, a 5-minute, or a 1-minute, or less, whatever kind of thing, but nothing more than a 15. And I usually don't give them much more than 2 to 3 days worth of power. After that, I think people have lost interest in that area. So again, the idea is that people will be willing to go short here. If there's enough of them, then they will have enough volume to turn the market back short again. But again, this is a humongous zone price-wise. So, well, where is it going to turn in here? We don't know. Number one. Number two, and we'll look at this idea here in just a minute about maybe finding some targets.
So, Marzi, I'm sorry. If you got that marked out, would you use Fibonacci within that to look for potential zones?
Where I want to go with a Fibonacci, and I'm glad that's perfect word there. Let's use a Fibonacci, and let's go from this low to, I could go to this high, or I could go to this high. And sometimes you just got to see which one fits. There is nothing.
I'm sorry, I was asking if you would use a Fibonacci
Within
inside the fair value gap.
No, because the only thing of interest inside of a fair value gap is either a prior line like, one of these lines we've marked, or the 50% zone. It's the only thing of interest inside of a fair value gap is the halfway mark or some other support resistance line that you've marked out. Nothing there. This is interesting. I'm going to anchor it there, and I'm going to zoom in. No, I'm going to scrunch. Here's 50% of that trend that I just marked out. Notice where it is, right there at that intraday line. Imagine that. And imagine that that fair value gap is also right there. Look at that. Now, we call that confluence. When multiple things align, multiple things point to the same thing. So you see here, we've got an indecision candle at the moment. We're on the 1 hour here, so we've got plenty of time for this candle to take shape. Matter of fact, let's come on down to the 5 and look at it in tighter detail. See, that is having a problem trying to decide if it wants to take out or do anything more with a new high of day. It looks like it did actually stick a toe out. Stupid thing. Hang on. It did stick a toe out, but it hadn't done anything else yet. So we've still got this fair value gap here to address. But like I said, it is so big, I don't know that it will happen. We'll just have to see. I don't know what will happen when it gets in there yet. Not to mention the fact that it's many days old, several days old, 3 or 4 days old. When did I mark it? Okay, so this is from Friday. And so we've had the weekend, Monday, and Tuesday. Today's Tuesday, right? Yeah, I've lost track of things already. Yeah. So we've got, I don't know that I would count it anymore. What I would do, however, is I would, however, come to a smaller time frame and bust this up to look for any other fair. And if you look at it on the smaller time frame, the only fair value gap is right here, and it's so small it's not worth marking. Zoom in on that. Right there. So a fair value gap is a 3-candle pattern. Candle 1, candle 2, candle 3. It is the gap between the wicks of candle 1 and candle 3.
You have another one to the left of that.
Now, you talking about this?
Oh, no, I'm sorry. The fourth candle breaks it.
Wait, where are we? So you've got a tiny
I was wrong.
Okay, yeah. See, now notice you had a fair value gap from here to here. What the next candle do? Went into the
Okay.
gap, and it did exactly as expected. There was enough there for people still wanting to go short that they did. So fair value gaps work on the smaller time frames, mostly the 15 and lower. However, going back to what is our price doing over here? Pushing. It's pushing that high of day. It's hit the 50% of our Fibonacci of the trend. Notice how it is stalling also. See that? Because that trend is still intact, and the algos know that trend, that Fibonacci is there. And sometimes we just have to figure it out, what we think the algos may be looking at. Remember, I wasn't sure where that Fibonacci should go until I started moving it around, and then I said, aha, it makes sense there. Okay, let's get the Fibonacci off. So, let's talk about more more marking ups. The other thing that we want to see are, and this you got to lean back and look at the chart, consolidation patterns. Notice, and I'm going to draw a rectangle here to outline this. You see where I am here. Come across. Do you see that the price keeps coming back to this zone? Now, Creed would call this a business zone or an area of discussion or whatever. But what it is, it's sort of akin to a TPO, a time price opportunity chart, meaning price keeps coming back here. So this is a target. It is not a place to get in. This is a target. All right?
All right.
So is this the place where the institutions are accumulating everything for what they want to do also?
Well, like TPO, time price opportunity, and these business zones, it is a place, I'm not exactly sure how the institutions might look at it, but the thing that I do want to point out is that we keep coming back here. We keep coming back here. Now, it doesn't tell us what we're going to do when we get here, but we keep coming back here in the last 2 days or whatever. So you notice we came up, we went a little bit above, we went a little bit below, went up, so we came up, we went a little bit below. So it's a target. But it's not an entry, it's a target. Remember, everything that we're doing here today is about targets. Entry is a totally different discussion, and we need to spend some time looking at that also. Notice we're still messing with that high of day over here. See it? Still messing with it. Okay. Are there others? What about right here? Now, when you say, well, how do I figure out the high and the low here? Well, what I'm looking for, and I might actually need to refine my box. I like to go by the body. Let me start over. I'm hovering my line and I'm looking for the highest body, which is this candle right here. And I'm looking for the lowest body in the sit. So I've got a low right over here. I've got a in that chop area, and you can see it came down, it came back into it, it came down, it came back into it. Now I'm going to edit the properties, and we'll extend it to the right. So there's a target. Notice also that it hit some line that I've drawn in here for some other reason. One of the nice things about TradingView, of course, is that you can label your lines easily. And you can label lines in Thinkorswim. It's just a little bit more labor intensive to do so. But you'll notice we've got this line that happens to also be one of my business decisions or, consolidation areas. All right. Again, confluence.
So far today, I'm just trying to. You got a pre-day high and low, a pre-market high and low, a high day, low day, intraday. You use dashes, consolidation, and fair value gaps.
Yeah, that's what I've got now, and trends. All right. So now let's add. Now again, you can get to a point where there's so much crap on here that you can't make any sense out of it. Since I took out this here, over here, this low becomes important to me. So does this low. Dadgummit, you stupid thing. There. Can I mark a trend high? Well, not yet, because this is still ascending and it has not rolled over yet to tell me that that's the high candle. So I'll have to go back to, remember we marked this out earlier from was it here? No, we marked it in the chart, didn't we? We marked it from, was it here to here? Yeah, that's it. There. No, that's not the one.
So that one that you said
that's not the one.
Don't remove it and make a correction. You wouldn't use that wick.
No.
Go.
That is an after hours anomaly. That is an after hours anomaly. So we're going to completely ignore. Okay, yeah, it was over here. It was this high of day. That's the one I marked. That one. That one. Stupid thing. Yeah, we marked that one. So there's that line there. Okay. Yeah, there we go. This is an anomaly. Anytime you see crazy candles like this after hours, you can ignore them. Just look at the body. Ignore the wicks.
What about the gap up that's there, or the gap zone? Go to where Sunday it's straight. Yeah, right there.
Right here. Okay. The theory goes that all gaps get filled. And for the most part, there's some truth in that. The challenge is we never know when they're going to get filled. We never know when it's going to get filled. Like I said, this is an anomaly. You would have not, there's a small chance, had market open or this happened here and you said, oh, I'm going long. I'm going to go take an option here to close this gap. You know, you wouldn't take this as a stock trade. You would take this as an option because look what happened. Now, you say, well, what's the chance of this actually happening? Like I said, this is an anomaly that a lot of times what will happen in the after-hour stuff, when the computer books are being settled and transactions are coming in, you might have an order that was fat-fingered, then they realized there was a problem and they canceled the order, but still the fat finger was put into the tape of happening by mistake, and you see this happening, and it's very possible this never happened. So I would not say that if you were going to say buy an option to close this gap, I would not think that it would happen here. It would have happened here, more than likely. More than likely. So yeah, anytime you see crazy wick candles in the after hours, ignore them. And just look at the body. Just look at the body. All right. So we got trend lines, we got horizontal lines, we got targets. We do have right here. See, I'm seeing the prices here, and I'm saying, well, I need targets above this, so I got to go over here and start looking up. And what do I see right here on the 15? A fair value gap. Let's zoom in on that so you can see it. See that? The gap between the wicks of candle 1 and candle 3. Now, it's not telling me it's going to do anything particular, but it's a target. All right, any question? I mean, this has been an hour and 8 minutes so far. It's been a pretty long video. You can set the last kind of things I want to show you about marking up a chart. This depends on if you are some type of a volume profile trader, if you like auction market theory. So this is your core stuff that I'm showing you here. Trend lines, horizontal lines, which are based on targets, based on highs and lows, maybe some consolidation zones, and some fair value gap zones. All right, I'm going to color this one blue to stand out as a consolidation zone. I'll do the same with this one. I like gray for my fair value gaps. So we see now on the smaller time frame. Oh wait, golly, right in front of me. Oh wait. No, I did mark it. Hang on. I did mark it. I think.
Marzini, could you save this and then tomorrow go into using the TPO or the volume profile or session?
Sure. We can do that as well. Yeah, there is a gap there. There. I missed that one. So, all right. So today, this is just chart markups. Again, your chart can get pretty ugly pretty quick. So you need to pay attention where your lines are and start taking them off when they become irrelevant. When they become irrelevant, otherwise, you end up with 5,000 lines on there. But, if we're trading the 5-minute chart, that's not too bad. That's not too bad at all. And if you're on a labeler like TradingView or something like that, I would have this labeled here, as show label always on the right, which it's not showing it. Okay, never mind. Anyway, and I'd say, and you would label these lines as far as, well, what is their significance and all that. Like I say, this line now is no good. I can get rid of it. Why? I've broke it. Can I set a new high day line? No. Why not? I've got to have some kind of a pullback to signify that that is the high of day. This candle does not tell me that. I need to have a rollover below at least this before I can say that that is obviously the current high of day, but it's not necessarily a valid target yet. Because you can just see what happened. We kept new high of day, 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 new high of day. Well, there's no signal there. There's nothing to work with there. I've got to take something out before I can say down here, before I can say up here, that's, the target high of day. Any questions here as we wind this down? This has gone, as usual, I never can seem to make a video less than an hour. Any questions from anybody?
Thank you.
You're welcome. We'll wind this down now, and then tomorrow we can talk about volume profile, auction market theory, stuff like that, other ways that you can mark up your chart. On that, I'm going to stop this recording, and I will drop a link in on that here in a little bit after I get it uploaded to YouTube. All right.